In this video, I want to talk about Mastercard because the stock is dropping meaningfully, and I believe this is a really good opportunity if you want to get long, because the stock is dropping but the fundamentals are improving. The revenue is increasing, the margins are increasing, the earnings are increasing, the free cash flow is increasing. Everything is going in the right direction, but the stock price is falling. So you have reached a reasonable valuation, and maybe now is a good time to enter and buy a position. If you were hesitant to buy Mastercard, maybe now is a good time. In this video, what we are going to do is I want to comment on the stock price action to show you that this is not the first time we have this kind of discrepancy between fundamentals and stock price. I want to talk about the business model in overall, the other trends we saw for Mastercard, but also for Visa and this industry overall. I want to talk about some numbers, some CAGR, the kind of earnings they have done in the past, and the kind of earnings you can expect in the future. We'll manipulate some data, and we will talk about the valuation. We will do the DCF together. So in this video, you will have a complete analysis if you want to know my opinion about Mastercard. Full disclosure, I have some ownership in Mastercard. I own some shares in Mastercard. This is roughly 8-9% of my portfolio. So I'm biased, obviously. So take what I say with a pinch of salt, but you know what I think about Mastercard. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I believe if you invest in Mastercard, it will not make you 25% per year, but it's a defensive play. In case you think that the S&P 500, the Nasdaq are overvalued right now, where do you invest? Well, my hedge is Mastercard. I have other hedges in my portfolio, but I have some defensive plays, some offensive plays, aggressive plays, but also defensive plays. Mastercard is a defensive play. And as the stock is dropping, when markets are near all-time highs, by the way, as Mastercard is dropping, it is very appealing for a defensive play. In case we have a crash for some reason next year, Mastercard will still be safe. Mastercard will still grow. If you look at the growth rate, even in 2022, this is the revenue growth rate here. I'm on Fiscal AI right now. This is the total revenue percentage change. Look at this over the past 20 years. When it comes to uncertainties about macro, some geopolitical conflicts in the world, Mastercard always grows. The only year with minimal growth, declining growth, was COVID. Well, this was a special event, right? But every year, this business has grown. You don't have cyclicality. You don't have impact because of inflation, interest rates, or whatever. This business is so resilient, nothing can stop Mastercard. The same thing is true for Visa. Even when the world entered a recession in 2022, Mastercard has grown its revenue by 17%. So pretty healthy, right? And now as the inflation rate is picking up, my estimate is growth rate will accelerate from 15% to a little bit more than this. So what has been the average growth rate for this business for the past 20 years? Well, that's 13% per year, if you take into account the special event of 2020. So pretty good for a defensive play, no? So pretty resilient. If you remove this line, this extraordinary year of 2020 with COVID, I'm sure the average is around 14%. But anyway, 13% is good enough. I wanted to start this video by showing you how resilient this business model is. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Now, let me start by saying this is not the first time you have a discrepancy, you have a gap between the S&P 500 and Mastercard. If you look at the past 2 or 3 years, you had the exact same phenomenon happening last summer. July 2024. For some reason, you had the valuation re-rating. The stock went down. As you can see from this chart, in green, you have Mastercard. In gray, you have the S&P 500. And you had a gap here. It was a very good moment to be long. And then the gap closed and we are back to the index. I am buying Mastercard because if the stock market is going up, Mastercard will have approximately the same returns as the S&P 500. No alpha generated. But when the stock market will drop, Mastercard will be a defensive play because Mastercard will drop less than the market. If you look at previous instances, it has proven to be a pretty good defensive play, especially at these valuation levels we have today. So I want to share with you some data about the fundamentals of the business. The market cap is roughly $500 billion. I'm expected to be $1 trillion in a few years. On a year-to-date performance, the stock is flat. Okay. So you are talking about an extremely well-run duopoly with gross margins of 80%, with operating margins of 60% and improving, with net margins of 45% and improving, free cash flow margin of 50%. Next question for you. Can you name 10 businesses with a free cash flow margin of 50%, a sustained free cash flow margin of 50%? It will be very difficult to find 10. Maybe you can, but can you do 20 now? No, you can't. It's very rare to find these opportunities and such businesses that have been here for so many years, so many decades. They are the leaders and nobody can disrupt them. If you scroll down and if you look at the revenue trends for the past 10 years, up and to the right, you had only 1 year of decline in COVID, as I told you before, but up and to the right. Nothing can disrupt Mastercard. What about the net income? Up and to the right. What about the operating cash flow here in yellow? Up and to the right. Free cash flow, up and to the right. By the way, if you compare the yellow line and the blue line, the operating cash flow and the free cash flow, the only difference is the capex. As you can see from this chart, you don't have much of a difference between the yellow line and the blue line, which means you don't have a lot of capex. And in a world with inflation, in a world where all the Magnificent Seven companies are increasing their capex with more AI, more data centers, it's good in your portfolio to have asset-light businesses. So Mastercard is an asset-light business because, as I told you before, they have extremely high margins and at the same time, they have almost no capex. So in case you have a recession next year, for example, who will survive? Either companies with a lot of debt or companies with a lot of capex when their free cash flow will decline, or Mastercard. Well, if I have to bet, I can bet very confidently that Mastercard will still be safe. Even if you have a very large recession of 1 or 2 or 3 years, Mastercard and Visa will still be safe because they just generate a lot of free cash flow. And what do they do with their free cash flow? As you can see here, they are doing buybacks. The green candles here represent the buybacks, which means like this. In 2016, they bought back 3% of their shares. 2018, 2% of their shares. And for the past 3 years, 2%, 2%, 2%. This is a buyback cannibal because they don't have to innovate. They don't have to reinvest in themselves. They don't need capex. So they are rewarding shareholders and using almost all the free cash flow to shareholders, to reward shareholders. As buybacks, they are buying back 2% of their shares, but also a small dividend yield, 0.5%. It is irrelevant for my investing strategy, but I always take it. And if you look at the valuation right now, the forward P ratio is 27. We'll talk about the valuation later, but yeah, historically speaking, the stock has been more expensive than this. Okay, so I wanted to start with this. Now, if you look at the CAGR of the company, the compound annual growth rates for all the fundamental metrics. I'm on Stock Unlock. This is the best website if you want to compound your wealth. Same thing with Fiscal AI. If you want to have this free form to compare CAGRs, Stock Unlock is the best. Fiscal AI has some good attributes. Stock Unlock has some good attributes. And you have both links in my description. to have a discount code. So go through my links if you want to use these websites. I'm using both these websites on a daily basis. So I recommend what I do every year, what I use every year. If you look at the past 15 years for this business, what have been the growth rates of each metric, right? The revenue, the earnings, all these things. If you look at the past 15 years, the revenue in green has grown at 11-12% per year. 11-12% per year, resilient. This is okay, this is pretty good, this is reasonable. But the business over the past 15 years has gotten more efficient. So margins have gone up. And if you look at the EBIT, the operating income, the growth rate is no longer 11%. It's not 12%, it's 13%. So tiny improvement of the margins. You go from a revenue growth of 12% per year to EBIT, operating income, of 13% per year. What about the net income now? Again, it shows an improvement in margins, an improvement in taxes, an improvement in interest. You go from an EBIT of 13% per year growth rate to a net income growth rate of 15-16% per year. So pretty good, right? Over the past 15 years, you have a company that has grown their profits, their net income, by 15% per year, 16% per year. Despite everything, all the macro uncertainties, all the AI capex, the move towards cloud, mobile, etc., right? And as I told you before, the company is using almost all its free cash flow to repurchase shares. So they have bought back on average 2.4% of their shares annually for the past 15 years. So let's say 2%. So that's pretty much it, right? You have a net income growth rate of 16% per year. You are buying back 2% of your shares every year, which means your diluted EPS is growing 18-19% per year. The diluted earnings per share growth rate has been 18% per year for 15 years. And over the very long term, stock prices will follow earnings per share. So if a business is growing earnings per share at 20% per year for 20 years, it's very likely, almost certain, that the stock price will follow and will generate 20% CAGR. Now, next question for you. You may be watching this video and saying, yes, but these metrics are all about the past. What about the future? Now, maybe you have some disruption risks with stable coins or something else. The world is changing. This is very good to look at the past. The past has been a very good indicator of the future, especially for such a stable business like Mastercard. But what about the future? This is a good question. This is a very good remark. And I can show you several things. If you go to Fiscal AI, another great website, you can check the KPIs, the key performance indicators for this business. You can go into more granularity into how the business operates, the different segments, the different revenue lines, the other geographies where the business makes money, all these kind of things. This is why I'm using both Stock Unlock and Fiscal AI, because you can navigate with these two websites, and you should be doing the same too. If you want efficiency and if you want to compound your wealth of 25% per year like I did, please use my links. Okay, you have this line, this KPI, total transaction volume, the red line here, that is going up and to the right. Do you think, very simple question, do you think in the world, in the next 5 years, 10 years, you will have more volumes, more transaction volume in the future? Depends on what you say, right? In my opinion, I think, especially with inflation, in absolute terms, the volume will grow much more than in the past. So I think this trend will effectively accelerate. I don't know if we had an acceleration since 2021. Actually, we can check percentage change. But I think now, with a sustained high inflation, this will grow pretty good. No acceleration. The volume, transaction volume is growing what, 8% per year? If I have to put an average on this, what has been the average? You click on this, you click on average toggle, 8.67% average growth rate for volume. Do you think in the future it will be more than this or less than this? Depends on what you think. I'm not here to tell you to buy or to sell. You have to make your own mind. Okay, next chart I want to show you is this: networked processed transactions. Do you think in the future you will have more transactions? Now, it's not about volume now. It's not about quantity. It's about transactions using the networks from Visa and Mastercard. This thing has been growing at 13% per year. Do you think they will continue to grow in the future? Do you think they will grow more, grow less? Actually, I can do the same exercise here and show you the growth rate. Yes, here we go. Growth rate, average. The growth rate has been more fluctuating, decelerating right now. In the past, this line was growing 15% per year. And since COVID, 22, 6, 13, 11, 9. Do you think it will pick up or not? Next question for you. You have to make up your own mind and make your decision, informed decision based on this information. For me, I think it will also accelerate. The world, especially with AI, will deal with more agentic browsing. You will use AI to make more transactions. And actually, you will have more bots, more agents doing more transactions. This is what I think. Maybe I'm right, maybe I'm wrong. We'll see in a couple of years. But I think now with the ChatGPT, Gemini, all these new technologies, they will allow integration of Mastercard and Visa within the LLMs. So you will have automated purchases, many more transactions in the future, thanks to AI. So the overall trend for the transactions will be 9-10% per year for humans. But for the integration of AI in our future world, I'm suspecting this trend is likely to increase. Maybe I'm right, maybe I'm wrong. We will see in a couple of years. Okay, so that was for the volume first. Do you think it will increase or not? And for the transaction, do you think it will increase or not? Next point I want to show you is the take rate. What is the fee that Mastercard takes for each transaction? If you look at the past 10 years, the take rate has been improving a little bit. So we went from a fee of 0.27% to the 0.35% and now the 0.37%. Do you think this will increase or not? These are the three growth drivers in the future. If your first answer was yes, I think more volumes. Second answer was yes, more transactions. If you think the third answer from there is yes, it will either be stable or growing. You know what the future will look like for Mastercard. Actually, Mastercard is that easy, is that simple. This is also why I have Mastercard in my portfolio, because the business model is not changing. The business is not being disrupted. The business is so simple, is so resilient, so strong. I don't have to spend hours monitoring the situation like I'm doing for my other stocks like, Fortinet or Landbridge. These kind of stocks, I need to monitor them. But for Mastercard, I don't need to monitor exactly every line of the earnings report or the transcript, the earnings call. I don't have to check this because I know that the three KPIs are going in the right direction. More volumes, more transactions, more take rate. I don't know if the take rate will increase or not in the future. What I know, if they are moving with value-added services and more margin improvement in the future, which tells me maybe this line will go up in the future. I don't know, maybe it will be stable or not. For other companies I have in my portfolio, the take rate is declining. I mean, you have MSCI, take rate is declining. You can check other companies. PayPal, the take rate is declining. But for Mastercard, no. For the Mastercard, as they grow, more volumes, more transactions, they are getting a little bit more profitable. Their fees are increasing. What is the maximum you can have here? I don't know. Frankly, it can go to 0.4, 0.45. How high can you go? I have no clue. And you don't have any clue either. So now that we don't have any clues together, how can you invest? What do you think? Do you think it will go back to 0.27? I don't think so. I don't think so. You have clear trends in this business model. The thesis is extremely clear. Now that you know this, now that you know this is a business that has grown the earnings per share at 18% per year, now that you know that nothing can disrupt Mastercard or Visa, maybe I can show you the valuation over the years. Maybe I can do this. It will be better on Fiscal AI. I can show you the ratios, trailing valuation, forward valuation, PE ratio, price to free cash flow. Anything can work, right? Anything can work. If you look at the blue line, the forward PE ratio, the red line forward PE ratio, and the blue line forward price to free cash flow, we are talking about the same. So let's pick one, and that's pretty much it. If you look at the forward PE ratio, this is the chart for the past 10 years. You can see before COVID, the forward PE ratio was oscillating between 22, 23, and 27. After COVID, the valuation spiked up, moved up a lot to a forward PE ratio of 40, 50, and then went down in 2022 to a forward PE ratio of 25, 26. And now it went up to 35, and we are back to 28. What does it tell you? What has been the average, the median of the valuation? The average for the past 10 years has been 32, forward PE ratio of 32. The median has been 30, 31, and now we are at 28, which indicates either Mastercard is fairly valued or Mastercard is a little bit cheap. I would not say it's a little bit cheap. I would say it's fairly valued. I mean, a forward PE ratio of 28, that's decent. Same thing is true for the forward price to free cash flow, by the way. We are at 28. What about the price to free cash flow of right now? Price to free cash flow right now is also 28, which means there is not a lot of growth priced in. Anyway, this is your price to free cash flow over time, 28. We have covered a lot of ground on this video. The past, the future, the key metrics to monitor, and the valuation. As you can see, the stock price is dropping, the valuation is dropping. If you don't look at the forward estimates, if you only look at the price to free cash flow, the lowest we got was 25 in 2022, and during COVID it was 26, and now we are 28. Compared to all the alternatives you have in this market, I could understand people buying Mastercard right now because you have a clear discrepancy to the market, but the fundamentals are actually improving. Based on this, based on everything we have, these are my assumptions for Mastercard. You can copy them, you can take a screenshot of this, do whatever you want. These are what I think are reasonable assumptions for Mastercard. If you think the free cash flow of the business will grow at 15% per year. Oh, by the way, I can show you what has been the free cash flow growth for the past 15 years. The free cash flow for this business has grown at 14-15% per year. You have a small gap between net income and free cash flow. Okay, you can put 14% if you want. I think this business can reasonably grow free cash flow at 15% per year. I think they will continue to do buybacks in the future. They will continue to repurchase 2% of their shares every year, which means a price to a free cash flow per share growth of 17%. Let me put 0 for this. I don't care about dividends. And I think the price to free cash flow for this business, a reasonable price to free cash flow for this such high quality compounder, is 30. If these are your assumptions, pretty reasonable assumptions, that could be your base case. In this scenario, the fair value of Mastercard right now is $750, which means the stock is 40% undervalued. And if you buy right now, you can expect a CAGR, compound annual growth rate, of 18% per year. Now the stock has dropped. Now Mastercard can be seen as cheap. And if you buy Mastercard now, you have very good chances of outperforming the market. You are watching my channel to learn how to outperform the market, how to analyze good stocks, to make some good due diligence, good research, to find promising stocks, high quality stocks to outperform the market. Mastercard is a good example. if you buy right now, and if these are the estimates and what will happen in the future, you can expect a CAGR of 18% per year. And now you can play around with the numbers. If you think you want to be more conservative, and you can expect a growth rate of 13% per year. And if you think they deserve a price to free cash flow of 25, these are your estimates. If you buy right now, and if you are conservative, you can expect a CAGR of 12% per year. Being conservative, right? You don't have a lot of opportunities in the past where the price to free cash flow was 25. You had one time in October 2022, another time during the COVID crash, and in 2016. So every 3 years, every 4 years, you get an opportunity with the price to free cash flow of 25. Maybe if the stock continues to go down, by the way, maybe you will get it. So I would say having a price to free cash flow of 25 for such a resilient business model with a lot of visibility is conservative. So for me, I am not putting 25. I'm putting 30. You can put 28, 29, 30. You get my point. And same thing for the free cash flow, right? You can play around with some estimates. Anyway, if you invest right now, you have very good chances of making more than 15% per year. This is what I try to say. So if these are your estimates, Mastercard is a pretty good buy. And this is in my portfolio. And as the price continues to drop, maybe I will buy more. So I will keep you updated. But yeah, now Mastercard has gotten to a reasonable valuation. You get a very good example of buying a great quality company at a reasonable price. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.